Good morning, everyone. This is daily trading analysis with the weekly recap for this week, which has been a little bit more relaxed. And we had 2 days of pretty good news, Thursday and Friday, which I think the market is doing something very sneaky. I've seen data, I've seen price action, and I've seen the sentiment of bullish for next week. So I'm gonna be bullish for next week. I think we have some kind of good background to really say so and have some really good expectations for next week. We ended the month of August with a huge week on the monthly chart. And I think September, with the expectations of the Federal Reserve to cut interest rates, if we go with the 25 basis points, which in my opinion the best approach to really sustain the markets and not freak out everyone, I think we are going to see quite good moves to the upside. So before moving to the charts, let's do a quick review of the economic data. On Monday, we got durable goods month over month, pretty decent, almost 10%. We were expecting a little push to the upside for 5%. So durable good orders are going to the upside. This is bullish for the spending, and that's good for the growth. Tuesday, house price index 5.1%, still a little bit higher, but I think the housing market it's special. I think we really need to see those prices going down to really finally go to the 2%. But this is not what I would like to focus. I would like to focus in these latest videos, not in inflation progress. I will be up to date to that, but my focus is on the labor market and also on growth, because the markets are, I think, focusing on that. But still, house Case-Shiller home price 6.5%, still a little bit high. We were expecting a little bit of a downtick, but well, we will see. Consumer confidence 103. 103, higher than expected, and another check in the right direction for confidence on the consumer side, on the spending, on us, support the economy. So Wednesday, Waller speaking, saying that we are seeing progress and we will see what kind of cuts we get. And finally, Thursday and Friday, we got the big data, the GDP growth estimate quarter over quarter, second estimate, 3%. We were expecting a push to the 2.8%, but 3%, it's really good growth. Price index, 2.5%, higher than the 2.3, another check in the right direction. Corporate profits pushing into positive territory, coming from the minus 2.7, and initially jobless claims and continuing jobless claims came as expected. So no surprises and good growth means that we are in the right direction. Also, GDP sales quarter over quarter 2.2%, more than expected. I think Thursday was a win day for the data. Not so much for the charts, but I think we are in the right direction to really demonstrate that we have a good economy, a strong economy that is off land. Finally, on Friday, PCE, PCE price year over year, 2.5%, less than expected, and as the previous one. Core PCE, which let me say first the year over year, core PCE year over year, 2.6, as expected, less than, as the previous one, less than expected. These two are good. And look at this, personal income 0.3, good. Personal spending 0.5, good. And now the month over month readings are as expected. So even though this one was a little bit higher, I think Friday started a spark of something. Michigan consumer sentiment 67.9, basically as expected and higher than before. But as I was saying, Friday I think started something sparked something that was pretty sneaky. We sold off, and then at the best position, at pre-market lows, we manipulate. We just did a big reversal for the end day, the end of the month, with more data that I'm going to show you that is pointing towards bullish sentiment. First, let's take a look. 70% of 25 basis points. That's pretty good. 25 by 25, I think, is the step moving forward. Another 25 basis points with 50% probability for November. And then we have this void because they think that it's a good idea to cut 50 basis points in December. I don't think so. But for now, this zone, it's taking really small steps into the cuts. 25 basis points, it's the good approach. As I was saying, the first thing that I would like to show you is the open interest on Friday. 30,000 positive in the S&P 500 on Friday. Remember that V reversal that we got. And also Nasdaq, 5,000 on a V reversal. That's the first sign that something sneaky is happening. I think we added bulls. We added longs, and these are heavy longs. 30,000 on the A-mini S&P, it's quite a lot. The second thing is technical. This is the monthly chart on the NQ. Look at this candle. We came off the lows 12% on the month. 12%. So we go to the daily, we can see that the range for this week was pretty low. It was not odd. Basically, it's 3% of range. That's nothing. But look at the month. We started August right here. We dumped 3 days. Remember, the start of August was the Black Monday, when everyone was freaking out. Look at this. Look at this. Don't forget about this. So we are right now inside a fair value gap that we held perfectly here. We have another one down here, but looks like we are already out the first one, with a hammer getting out. And look at the ES. The ES is at 1% of all-time highs, with 30,000 open interest. This looks bullish as hell. This is crazy bullish. So I think the V reversal that we got, it's basically end of the month flow. You know about those. End of the week, end of the month, end of the quarter. In this case, it was an end of the month. It was establishing some range. We broke out. We started, and we basically, if this was not Friday, if this was not end of the month, I would say, look at this manipulation. Look at this manipulation at pre-market lows. We encounter on Friday a huge amount of overnight longs, and then we basically dumped them all and started from scratch. Look at this. Look at that. It was crazy move. We even took high of day. So this is super bullish. And this coupled with the fact that the monthly candle ended up being huge, weak on the downside, means a lot to me, because it's not only technical visual on the chart, it's also on the data, the open interest. And look at this. Where are we in terms of point of controls? we are from the bottom, we are right above. We just fight wherever we needed to fight in here. We are right there. And as you can see, both are in the same spot. We are colliding, we are clashing here in both. And something interesting is that if we continue higher and start seeing 600s again, look at this. Look at these relative equal highs. These are going to be destroyed. Actually, I thought about that during overnight in Friday. I thought we are going to push, pump into that, and then establish the range. We never did that, but this is a clear target. We have higher lows, and we have these relative equal highs. This is not going to last too much. So after that, we have a big void of volume until the zone of 19,840, which is another buy side liquidity. And I have here a Fibonacci for the 1 hour rejection candle that we got. So as we start to basically, let me just move that here. As I will be paying attention to this move here. The first target is going to be this buy side liquidity with a 15-minute fair value gap. I think this is going to be destroyed. The first thing that I want to see is a bounce of that and then continue higher. And I'm going to see the quadrants of this 1 hour candle. This 1 hour is my frame of reference because we tried to go higher and we dumped. So this buy side liquidity is below the 50% of that 1 hour candle, the green line. And then we have a lot of volume here. So that would be my first target. My second target, I would say, the first target is just push the liquidity, bounce, held, hold that, and then attack the 1 hour candle and the 50% zone. We will be at 19,850s, and the next move would be 20,000. That is going to be pretty heavy, but I'm framing my levels, I'm framing my expectations to do that. Anything but this, it's no trade for me. I'm not going to short this market. I'm not going to do shorts. I took one short this week and it was pretty decent, but I don't like being short. I don't like being short. And more even look at the data, what I'm showing to you. I'm not gonna do a short. No way. So let's see my trades on Friday real quick. Big bullish push into the overnight. We got this first fair value gap here, but I usually don't take when they hover and then tap. I want an immediate reaction to that. That's what I got here. It's not a perfect setup, but it was quite cheap. So after that tap, we displaced and we pulled back to that. So we never touched the fair value gap. This was quite bullish. I was about to take this, but maybe they were doing that. So I was expecting to something else. So this inverse fair value gap was my main reference, and that's what I took. 6 points on this pretty bullish candle here. And my target was not a liquidity zone because I have framed, look at this, 1 hour. I had a 1 hour frame here. This 1 hour on Thursday was my main target. I mean, we had a fair value gap in here, and I was measuring the body of that 1 hour candle and doing quadrants 0.25, 0.50, 0.75, and the complete retracement. We finally did that at the end of the day. So I'm also bullish because of the, but that was my main reference to that. So the first target was, this was the consequent encroachment, this orange of the 1 hour fair value gap, and this is the 50% of that 1 hour body candle. So my target was this. We started to chop, but accumulation. And I saw this. I was looking for turtle soup, big move down, then rejection. We took sell side, and then, I mean, that was a trade that I had to take. You are trading or trying to trade ICT concepts, you know that this into an inverse or the minor buy side liquidity, I mean, trade, it was a 6 point also of risk and pretty good. I always take this and the low of the candle that supports the inverse, or in this case, this supports the bullish fair value gap, or in this case, the inverse. So pretty decent. So two trades, two, I would say, scalps, 23 points, 34 points. It's like 34, 50, 58, more than 1,000 bucks. I'm more than happy. And more than so, because look at the chop after the, this was the data, ECE, dumped, it went up, dumped again, and we were just doing, what are we doing? Look at all the wicks that were built here. All the wicks are well built here. This was untradeable. What are they doing? So finally, I was starting to watch here again during the afternoon, but usually on Fridays, end of the month, I prefer to just analyze right now, the day after, instead of trading. But the manipulation move from pre-market lows was pretty clear. We got displacement. We got a lot of setups here. We have this order block being tapped into another push. I mean, and the end of the day with this push, this is quite telling. We have the open interest, huge open interest. We have the end of the month, weak candle that is pretty bullish. We have also the 1 hour that we displaced. When we recover, we have the point of controls. We have a lot, and the economic data is good. We have a lot of things to really think about being bullish next week. There's a lot of things. In other markets, what I'm seeing is that dollar is quite strong, but it's strong because it was basically destroyed. I mean, we were at levels of July of last year, almost at parity at 105.51. So a bounce was due to happen, and we went through the daily fair value gap in here like a knife. We are right there, so I'm gonna leave it there. But we have an inverse here. We have, for all these moves, we have retracement. I'm going to remove the fib, but as you can see, the dollar is super weak because the Fed is going to cut interest rates. So the economy is going to suffer a bit, and obviously currency is going to suffer. This is good for equities, but this move, I expect a lot more chop in here. I expect weakness long term for the dollar, but I wouldn't focus too much on what the dollar is doing. Yields, though, bounced from this zone. 2-year yield, 3.9, below 4% the 2-year yield, and also below 4 the 10-year yield. So what is happening with the yield curve? Well, This is the most important thing that you need to pay attention. We are right there at an inversion. We did it one time in here. We are going to do that most probably next week. We are going to un-invert. When we un-invert, this doesn't mean that we are in a recession. It just starts the timer. But the more we were inverted, the more is going to suffer the economy when we un-invert. So we have to really pay attention. Once we un-invert, bonds market is sure, and I trust them because they trade risk. The bonds market is saying we are going to enter a recession at some point, 3, 6, 9, 12 months. But pay attention to how we do the un-inversion, how we retest, because we un-inverted and we just quickly rejected. We freaked out. But this is something that we have to do. We have to un-invert. We have to come back to the, the, the yields that are for growth, not the yields that are for because Fed is putting money into. So we are going to un-invert. We are so near that it's going to happen next week. And this is the start of the timer. Pay attention to this. Apart from that, I would like to see XLF. Look at this. Look at this. Economy is strong. Financial system, pretty damn strong. I mean, this is crazy. Crazy. If you have doubts of the US economy, I think this is one of the signs that XLF, financial system, banks are doing pretty good. What else? Consumer discretionary versus staples. One of the strongest things that the US economy have, 75% of the growth is XLY, consumer discretionary. We dumped and we are recovering. So the range in which we were working got tapped here and we quickly rejected. So this is good because XLP it's more defensive. XLV it's more defensive. And as you can see, they are flying. So I think there's some kind of rotation into defensives in Wall Street. That's undeniable. But also the good sectors are also pushing. Those sectors that, despite being in a recession, means holding, means there's growth still. That's one of those is XLF. I'm happy to see this. Another one is XLY versus XLP. The ratio between the defensive and the offensive. Actually, XLY it's suffering still, but it's in the upper side of the range. So we are strong. Don't hesitate on that. Semiconductors are in the middle of the range. These are the ones that are suffering more. That's affecting XLK, which is also in the middle. That's affecting NQ, which is basically, look at the daily. We are way below the all-time highs. But look at the ES. The ES is already there. So we are going to be pushed by ES. Could be. Look at the Friday close. So this is something that looks pretty bullish. We might be a little bit concerned about certain things, certain numbers. But what is true is that I think we are going to attack the upside. Let me just do again the summary. I think the first is attack. These buy-side liquidity, these relative equal highs are juicy, are super juicy. So we are going to push those. We're going to go back and let's see how it behaves. Because then the second buy-side liquidity to the upside, after this void, it's doing this and start climbing to 20,000. 90,150 would be my second target. And we have this 1 hour week that I need to be completely retraced. And that's my plan. Anything but this, I'm not taking shorts. I'm not taking shorts next week. No way. Open interest, bullish candles, price action is bullish, spikes, end of the month, bullish with this move on Friday, B-shaped reversal, quite clear. I would recommend you look for upside. And having said that, that's all from my side. As always, I hope you found this video useful. These weekly recaps, I do them every single week on Saturdays to review everything for me and also for you to be prepared also. But apart from this, I also do daily forecast, daily analysis from Monday through Friday for market forecast, market updates, and market recaps. I appreciate your time. If you found this kind of channel useful for you, please like the videos, subscribe. I put a lot of content for you to understand my way of trading, to review other markets. There's a lot of info in this channel. So if you are new, welcome. And remember that discipline and risk management are key for your success. Monday is closed. So we have a long weekend ahead to study, to analyze, to review the markets. So do that and see you on Tuesday. Have a nice long weekend and let's be prepared because I'm going to be bullish as hell. Let's see what the market gives to us. I want to take a lot of opportunities, but patience, patience. Let's see what happens. Have a nice weekend and see you on Tuesday.